Global markets are on edge this week. Investors are eagerly anticipating key economic data releases and central bank pronouncements. This information will provide crucial insights into the health of the global economy. It will also offer clues about future monetary policy decisions in major economies. The U.S. inflation data, in particular, will be closely watched by market participants worldwide. Market sentiment is currently cautious. Investors are concerned about the potential for persistent inflation and slowing economic growth. The recent banking sector turmoil has added to market uncertainty. The ongoing war in Ukraine and geopolitical tensions between the U.S. and China are also weighing on investor sentiment. In this uncertain environment, investors are seeking clarity. They want to understand the direction of inflation and the likely path of interest rates. The upcoming data releases and central bank meetings are expected to provide some much-needed guidance. Until then, markets are likely to remain volatile as investors adjust their positions. The U.S. Consumer Price Index report for April is due on May 15th. This is the most significant economic data release of the week for global markets. Economists will scrutinize the report for signs of persistent inflationary pressures in the U.S. economy. A hotter-than-expected CPI print could fuel market expectations for continued tightening by the Federal Reserve. This could potentially delay rate cuts that were previously anticipated in the second half of 2025. Beyond the CPI, several other U.S. economic indicators will be released this week. These include initial jobless claims, retail sales data, and the University of Michigan Consumer Sentiment Index. These indicators will provide further insights into the health of the U.S. economy. They will also shed light on the strength of consumer spending, a key driver of U.S. economic growth. The Federal Reserve will be closely monitoring this week's economic data releases. The Fed remains committed to bringing inflation back down to its 2% target. However, it is also mindful of the risks of over-tightening and potentially pushing the U.S. economy into a recession. The Fed's next policy meeting is scheduled for June. The outcome of that meeting will be heavily influenced by the economic data released this week. In Europe, the European Central Bank is grappling with similar challenges. Inflation in the Eurozone has been more persistent than initially anticipated. This is partly due to rising energy and food prices stemming from the war in Ukraine. The ECB has already raised interest rates aggressively to combat inflation. However, there is growing division within the ECB's Governing Council about the future path of monetary policy. ECB President Christine Lagarde is scheduled to speak on May 17th. Her comments will be closely analyzed by market participants for clues about the ECB's next policy move. Some ECB officials are advocating for a cautious approach, fearing that further rate hikes could push the Eurozone economy into a recession. Others believe that more aggressive action is needed to tame inflation. The euro has weakened against the US dollar in recent weeks. This reflects concerns about the Eurozone's economic outlook and the uncertainties surrounding the ECB's monetary policy path. In Asia, China's economic data will be in focus this week. Retail sales, industrial production, and fixed asset investment figures will provide insights into the pace of China's economic recovery. Recent data has suggested that China's post-pandemic rebound may be losing steam. This has raised concerns about the potential for a sharper-than-expected slowdown in the world's second-largest economy. The Japanese yen remains under pressure against the US dollar. The Bank of Japan is maintaining its ultra-loose monetary policy. This is in contrast to the tightening policies of other major central banks. The divergence in monetary policy has contributed to a sharp depreciation of the yen, raising concerns about imported inflation in Japan. Meanwhile, geopolitical risks persist in the Middle East. Tensions in the region have eased somewhat in recent weeks. However, the potential for supply disruptions remains a concern for oil markets. Brent crude oil prices have stabilized around $84 per barrel. This is due in part to production cuts by OPEC+ and rising summer demand. However, any escalation of geopolitical tensions in the Middle East could send oil prices higher, further fueling inflationary pressures.